The majority of Americans are living paycheck to paycheck. And this isn't just people making $40,000 a year. Even people making $200,000 a year or more are still broke. And there's a reason why. It's not because of your boss or your parents or your credit card company or the White House or even a random guy on YouTube. It's because you don't have a plan to turn your money into wealth. But that ends today. Even if you're starting from zero or you're struggling to build wealth, in this video, I'm gonna lay out a 7-step plan that you can follow step by step to actually create a plan to change the trajectory of your wealth starting today. Step number 1, change the way you think about money. Jaspreet, how is that going to put any money in my bank account? If you don't come from money, the first thing you have to do is build a wealthy mindset, because generational poverty stays generational, not because it's in your DNA to be poor, but because you were raised to believe things that poor people do. Let's do a little exercise. How much money are you making in a year today? Think about it in your mind. You don't have to tell anybody. Once you know that number, now add a 0 to the back of it. If you're making $50,000 a year, now make it $500,000. You're making $100,000 a year, make it $1 million. What do you need to do to make that happen? The first thing that people think is, what are you talking about, Jaspreet? How in the world do you expect me to go from $50,000 to $500,000 a year? My boss is not going to give me that raise. That's impossible for somebody like me. And this is where we have to change that thinking. If your goal is to achieve a certain outcome, in this case, wealth, financial freedom, call it whatever you want, you have to take certain actions to make that outcome happen. Well, those actions only happen if you think that you can take the right action to achieve that outcome, and you're only going to think that way if your subconscious can think positive, wealthy things. So you have to change how you think. You have to rewire your brain, because if you were bred to think like the majority people, you have to rewire that brain. And that means start by changing the way you talk. Instead of saying, I might become wealthy, I hope I become wealthy, I wish I could become wealthy, I want you to say, I will become wealthy. Period. You will become wealthy. Because if you don't believe that you can do it, and I mean wholeheartedly believe, it's going to be impossible. Because you can be slapped in the face with opportunity, but you're not going to see it as opportunity. When the economy goes down and markets crash, the majority of people see fear and panic and they run away. But for the financially savvy that have been through it, they see that as opportunity. See, the same thing can mean bad to one person and opportunity to the other, but you have to be able to cut through the noise and believe that you can become wealthy. Now, the second mental roadblock that you might have to get over is understanding that it's okay for you to become wealthy. Because a lot of times, myself included, we create these negative associations with money. Money's evil. Rich people must have done something bad. And it's because we grow up with this mindset of being told that we don't have this. That's for those types of people. Rich people have done this. Rich people are evil. You have those negative associations with money. You're not going to want to go out and actually become wealthy yourself, because you don't want to become that evil person. But when you start to understand how money really works and how money plays a part in your life, you can start to see how money can really be used in your life. Because I'm not saying your life has to revolve around money, but you have to understand how money plays a part in your life. My goal for you is to live a great life. And if you really want to live that great life, well, you got to be physically fit, you got to be mentally fit, you got to be spiritually fit, and you got to be financially fit. Money is just one part of your life. When I talk about being physically fit, look, it's good to be jacked. It's good to be healthy. It's good to be in good shape. You don't want to be morbidly obese, because now if you are, the only thing you care about is being healthy again. So yeah, take care of your health. Work to get that six-pack. Get in the gym. Put down the donuts and ho-hos and get on the treadmill. Number 2, when we talk about mental fitness, look, you gotta be happy. Your money is not what's gonna make you happy. Your money might make you happier. It might give you more things that will make you more happy. But if you're surrounded by toxic people, if you're surrounded by people that keep putting you down, if you're surrounded by people that keep making you feel like crap, you got to get away from that. Sometimes the depression and anxiety that you feel isn't caused by things in your brain. It's caused by the people that are around you, and you got to get away from it. That way you can actually heal your brain and you can actually feel more mentally happy. You got to figure out how you can do that. Maybe you have something going on. Maybe you need to talk to a specialist. Maybe you got to get some real medical attention. Whatever it is, take care of your mental health. Then it's your spiritual fitness. Look, I'm not saying go out and be religious, but I believe that every single person has a purpose. You might not know what it is yet, and it might change time to time, but you got to think, what is your reason to get out of bed every single morning? If you woke up tomorrow and there was $10 million in the bank account, what are you going to want to do? After you travel for 6 months and buy a Lamborghini and a Ferrari, then what? Now what are you going to do? What's your reason to get out of bed and want to do something? What is your mission? Think about that. And then at the top is financial fitness. This is where now having more money can remove the stress of paying for bills. It can remove the stress of going to Disney World. It can remove the stress of going on a nice fancy vacation for your wife or your husband. And it can also remove the stress of paying for college for your kids. pay for the health care for your parents. It is important to have money. Money is important because it can remove a lot of the financial stress, but it's not gonna fix everything here. You gotta work on getting jacked, you gotta work on being happy, and you gotta work on being spiritually fit, but you also gotta work on building that financial fitness as well. Once you build a mindset to think like a wealthy person, now we can move on to step number 2, which is stop the financial bleeding. Now we're gonna get into the actual practical stuff, because if you ever feel like you get a raise, but you don't see any more wealth, you don't see any more money in your bank account, well, there's a problem. When most people make more money, they go out and spend more money. It's called lifestyle inflation. You get a raise, so BMW gets a raise. You get a raise, your landlord gets a raise. You get a raise, Delta gets a raise. Because as you make more money, you want to show it off. You just got this nice new promotion, you need a new home. You got this nice new raise, you need a new car. You got this nice new thing at work. Let's go celebrate. So we want to go and pay and spend. And I get it. But if you really want to build wealth, you got to stop the financial bleeding first. If you don't have money in your bank, you don't have any investments, the first thing you got to do right now is you got to save $2,000. This is not the end all be all, but this is the starting point. You need to go out and save $2,000 as fast as possible. Throw this money in a separate savings account, and this is there only to protect you against an emergency, in case your car breaks down, in case your kid gets sick, in case something bad happens. That way you don't have to go into debt to fix that problem. So you need to save this $2,000 as fast as possible. Once you got the $2,000, so you have a little bit of breathing room, the next thing you're gonna do is pay off your credit card debt as fast as possible, because this credit card debt is costing you 15, 20, 25, 28% a year, which is keeping your credit card companies rich, is keeping those credit card companies flying in private jets at your expense. So you need to do this as fast as possible. During this stage, if you don't have $2,000 saved, or if you have credit card debt, you are in what I call the financial danger zone. Because right now, you are in financial danger. If you are in this situation, you got credit card debt, you don't have $2,000, you are in the financial danger zone, and you want to get out as fast as possible, because this is money that you are burning. You are throwing it in the fire, you were just dumping it down the drain, and we got to turn that around. During this phase, if you have credit card debt, if you don't have $2,000 saved, this is where you want to make the extreme sacrifice. I know this is not fun, but it will pay off dividends for the rest of your life if you can get serious about this. And you can pick how extreme you want to go. But the more extreme you go to pay this off, to save this $2,000 as fast as possible, the nicer and the wealthier you are going to be able to live. That means right now, work to earn more, work to spend less, get as much money as possible extra. That way you can attack this credit card debt, pay off your stupid and silly purchases that you made before that you couldn't afford. Work to put this money aside. That way you have that money there. During this phase, this financial danger zone, what I say is you cannot afford Netflix. And people get angry. Jaspreet, Netflix is $15 a month. What are you talking about? It's not the $15 a month. It's the 2 hours of Netflix time a day that you're spending. The average American is watching more than 3 hours of television a day. This is Netflix. This is your Hulu. This is whatever else is out there. If you got credit card debt, how can you sleep comfortably knowing that you spent 2 hours watching TV? This is the time that you need to be changing that Netflix time into earning time. Maybe this means you're learning. Maybe this means you're reading books. Maybe this means you're watching YouTube videos on how to actually build your wealth. Or maybe this means you're doing something. Maybe you're building a business. Maybe you're driving an Uber. Maybe you're going out and earning some money, extra hours at your shift. Whatever it is, you're making some extra dollars because you want to get out of this financial danger zone as fast as possible. Step number 3, give every dollar that you earn a job. That means every time you get paid, you always have money to save, you always have money to invest, and you only spend what's left. Let me show you why this matters, and I'll show you how to do it. Let's assume this is you. For my male followers, I drew a mustache, which in my native language Punjabi we call a much. For my female followers, I drew a braid, which in my native language Punjabi we call a gut. Let's assume that you are 25 years old right now. I know, super young, but let's go back in time. You're 25 years old. You started learning about this financial education stuff early. So between the ages of 25 to 35, you invested just $200 a month. And then at the age of 35, you stopped investing money. You never invested another dollar again. Versus over here, you have my broke cousin Bunty. Now in this situation, my broke cousin Bunty is kind of smart, because now at the age of 35, he realized that, oh, I should have started investing before. So he didn't invest at 25 or 30. He started investing at 35 years old, which in the grand scheme of things is better than not investing at all, but it would have been better if he started at 25. So now what he does is he starts investing $200 a month, and he does this from the age of 35 through 65. So you invested for 10 years, 25 to 35, $200 a month. Bunty invests for 30 years, 35 to 65. That means cousin Bunty invested $72,000. You invested $24,000. If we assume that both of you get a 10% average annual return on your money, which is the average historical stock market return, let's take a look at the returns. Bunty's $72,000 invested from 35 to 65 has now grown to a little bit over $450,000. Not bad. But your $24,000 that you invested between the ages of 25 and 35, and you never invested again after the age of 35, but your money continued to compound and grow at the 10% a year, well, now your money grew to a little bit over $1.1 million. You have more than 2 times what cousin Bunty got just because you started earlier. This is why it's so important to always have money to invest. And you would say, well, Jaspreet, oh my God, what do I do? I'm 35, I'm 45, I'm 55, I haven't started investing yet. Well, this is where now you have to be more aggressive, you have to be more systemized, and you gotta get that money to work. So let's talk about how do you actually systemize that money. A simple rule of thumb that you can follow is something like 75, 15, 10, which says for every dollar that you earn from here on out, 75 cents is the maximum that you can spend. 15 cents is the minimum that you invest. 10 cents is the minimum that you save. Now this money that you're saving, again, you're starting out just to get this extra emergency savings money there to protect you against an emergency. Okay, so this money is going into a different bank account, just waiting, hopefully never be used, but it's sitting there just in case you need it. This money, your investment money, the 15% of every dollar you earn is going to be what you use to make yourself wealthy. You can invest the money into stocks, you can invest this money into real estate, you can invest this money into bonds, you can invest this money into startups, you can invest this money into learning, you can invest this money into paying down debt. There's a lot of ways to invest that money. I'll talk more about that in just a minute. But the whole idea is this money that you invest is what's going to make you wealthy. You want to put this money into a separate bank account, into a separate brokerage account, into someplace else so you don't accidentally spend this money, and now you're only living off of 75 cents of every dollar that you earn, which is going to be hard, which takes sacrifice. But if you live like this, then you're going to have the opportunity to build more wealth, to start building that generational wealth, and the more you invest, the wealthier that you can become. And this is why, you might have heard me talk about this before, I have my team at Briefs Media publish a free daily newsletter called Market Briefs, which breaks down what's happening in the financial markets so you can be a smarter investor. It's completely free. We break down what's happening in things like the economy, housing, stocks, crypto, and the global economy into fun and witty and easy to read newsletter. It's read by hundreds of thousands of investors every single morning. So if you have not joined Market Briefs yet, I have the link for you to join down in the description below. Step number 4 now is earn more money. You might be saying, Jaspreet, how in the world am I supposed to live off of just 75 cents of every dollar that I earn? I'm already struggling to survive living off of every dollar that I earn. Well, the first thing I want you to understand is if the government were to raise your taxes tomorrow, what are you gonna do? Cry, complain, scream, kick? Well, eventually you're gonna have to figure it out because the government's gonna take that money before you even see that money. And if you don't pay it, you're gonna go to jail. This is that same thing. You are taxing yourself, but now instead of making the government richer, you're making yourself richer. That's why I want you to automate this, create 3 different bank accounts, that way anytime you get paid, money is automatically put into the different accounts. But now, I don't want you to deprive yourself of every nice thing in the world. I want you to be able to buy the nice things, but I also want you to invest more as you earn more. So now take a look at this. Let's assume now, hypothetically, let's have some fun, that you doubled your salary tomorrow. You started making more money. Well, when most people make more money, what do? They spend more money. We talked about this already. People make more money, they drive nicer cars, they buy better watches, they go and live in better homes. This is where what I want you to do is continue following this flow. The nice thing about 75, 15, 10 is that you make more money, you have more money to spend, but you're also investing more money, you're also saving more money. Whether you're making $30,000 a year, $300,000 a year, or $30 million a year, you always got money to put aside for saving, investments, and spending. So how do you actually go out and earn more money that way you have more money to spend and save and invest? Well, let's talk about 3 options. Number 1, you can invest in your skills. Number 2, you can work to become a freelancer. Number 3, you can work to start a side hustle or a business. Now, starting with your skills. This means You're taking your money and you're going to invest it to improve some sort of skill set, some monetizable skill set. There are certifications that you get online for a few $100 to a few $1,000s that can help you get a specific career. There are specific classes that you can take to help you be better at a specific skill that's monetizable. The key is this skill monetizable? This is not going out and taking a class on European dance. You're not gonna make any money doing that, okay? A real monetizable skill. This might be sales. This might be sales copywriting online. This might be advertising, more specifically YouTube advertising, Google advertising, Facebook advertising, Instagram advertising, because if you can get really good at that and you can help a company scale their advertising from, let's say, $3,000 a month to $30,000 a month, well, now you can get a piece of those profits as well. If you can learn video editing, you have a skill that you can sell because a lot of people are trying to go digital now. If you can learn SEO, more specifically SEO to actually build a company's presence, to drive more leads, to drive more sales, well, now you have a monetizable skill. These are skills that you can learn, pay to test, and then you can go out and sell these skills to a business and charge a lot more money to do that. Number two, this is freelancing. There are a lot of places you can go out and do this, right? Uber, you can use Grubhub, you can do a lot of those, or you can even do digital freelancing, which is selling your services. Let's say you are good at digital design, you're good at graphic design. There are platforms on the internet, like Upwork or Fiverr. You can sell some of those skills to a business in exchange for some money, and as you start to grow, well, then you can start to raise your prices as well. If you're a good writer, you're a good video editor, you're good at being very organized, you can be a virtual assistant. These are all things that you can do to freelance as a way to add some more dollars into your pocket. You don't gotta work on a specific schedule. You can work in your own time, set your own prices, and start to get paid to do that. There's a lot of platforms on the internet that can help you with this. Then a side hustle is taking it one step further. Now, in general, this is kind of like starting a business. I don't really like calling it a side hustle because at the end of the day, if you're starting a side hustle, you're starting a business. But the whole idea here is you're creating something as a way to make some extra cash, which could potentially become a business in and of itself. And this can be really anything. I mean, if you're good at washing cars, you can start a car detailing side hustle or business. You're good at cleaning, help landlords clean up their rental properties after a tenant moves out. You're good at painting, start a painting business. You're strong, start a moving business, help people move from one house to the other. You're good at creating videos, help realtors create videos to sell their properties. Find a direct use case for the skill that you have to build their business. Don't just create some ambiguous product like, oh, I'm gonna go and take photos. For who? Just general? No one's gonna pay you for that. People don't care about a photographer, they do care about a wedding photographer. They do care about a business product photographer if you're helping e-commerce companies sell their products better. But a general photographer, you're not gonna make any money. Step number 5 is buy income producing assets. Now listen, I'm just a random guy on YouTube. I'm not a financial advisor. Investing has risks. You're never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence and never blindly trust a random guy on YouTube. But I like to invest for income. The majority of my investments are income producing investments, which means I buy something and it pays me to own it. You can compare that to a stock where I want to buy it for $100 and hopefully I can sell it for $200. The problem is I don't make any money until I sell, and I don't make any money if it goes up to $200 and then I actually sell, which is fine for some people, but I prefer the income for most of my investments. That means every time I take this money and I put it to work, I'm getting paid back. The goal for me is to earn this income as passively as possible. There's really no such thing as true passive income, but it can be kind of passive. So for example, if I invest in a dividend paying stock, this is where I'm investing in a company or a fund, and this company is going to pay me generally every 3 months, meaning every quarter, without me having to do anything. There are plenty of stocks, there are plenty of funds out there that do exactly that, where they have this extra cash sitting in their bank account at the end of the year, and instead of reinvesting this money back into the business, instead of saving that money, they just give it away to the owners. And who are the owners? The shareholders. And you can be a shareholder with as little as $100. So if you start taking that money and you buy this, hopefully the stock will go up in value, but also along the way, they'll just keep sending you checks every 3 months. Now, it's not actually a physical check. The money generally just gets deposited into your brokerage account, which I like to reinvest to buy more of that dividend stock or fund, because now I just keep buying more cash flow. So I use this money to buy cash flow, When this pays me cash flow, I reinvest that to buy even more cash flow, and you can keep doing this until, well, whenever you're ready to start using this cash flow to pay your bills. The other one that I like is buying rental real estate. And the way this works is I'm gonna go out and buy a property, not with the goal of me actually living there myself, but to rent it out to someone else. And if you do this correctly, which yes, it is possible, you can put a tenant in the property. The tenant will then pay you rent. You can use that rental income to pay your property taxes, your insurance, your maintenance, your management fees, your property taxes, and your mortgage if you have one, and then put some money in your pocket every single month. It is difficult to get started. It takes way more work to get started. It takes more money to get started. It takes more headache to get started. You gotta meet more people. But once you figure it out, it is 100% possible. I know this because I've been doing this for more than a decade now, almost 15 years now. So yes, it is possible. It is possible today as well. It is possible tomorrow as well, and it will continue to be possible. Sometimes you gotta be a little bit more picky. It is difficult, but it is possible for the people that are willing to put in the work. If it was easy, everybody would do it, but it is possible if that's something that you're interested in. And the nice thing about rental real estate is, in addition to the cash flow, you own a hard asset because you can see, feel, and touch the property, and you get a bunch of tax breaks as well that you don't get here. When you earn your money from dividend-paying stocks, you do pay lower tax rates than if you would have earned that same amount of money from your job, but you don't get the same tax breaks that you would get from rental real estate. Step number 6 is use the 8th wonder of the world, compound interest. Let me show you why this actually matters by putting some numbers to it. Let's assume that you go out and you invest $100 a month into a fund, a dividend-paying fund. I'm not going to say stock because individual companies have more volatility. Let's assume you're investing into a fund, an ETF, a mutual fund or index fund, and you invest $100 a month into this fund. And at the time of you investing your money into this fund, it's paying out a 3% dividend yield, which is $3 a share. That means for every $100 you invest, you're going to make $3 a year in dividends. Not a whole lot of money, but you stick with it. In addition to this $3 dividend a year, this 3% dividend a year, you see a 8% annual growth rate in the stock. We know that stocks in general go up, not always up, but in general over the long term. And this fund has an 8% annual growth rate, meaning you expect the stock to grow in value by 8% a year. And there's a 5% dividend growth rate, which means this company will also be making more money, and as they make more money, they start to pay out bigger dividends. And we're going to assume that they have 5% extra cash to pay out their dividends every year. That doesn't mean you're gonna go from getting a 3% dividend to an 8% dividend. That means you're gonna get a 5% growth on the amount that they're paying you every single year. So you go from $3 to $3 and some change to the next year. You see this 5% growth rate in the actual dividend that you're getting. After 10 years of investing $100 a month, you will have invested a total of $12,000, which has now grown in value to $19,300. But this is also paying you a dividend of $620 a year. Now, if you say, Jaspreet, that doesn't sound like a lot of money, well, watch what happens as you start to let your money compound and grow. If we do this for another 10 years, you would have invested $24,000, which has now grown in value to $62,000, and you'll be making an annual dividend of $3,100 a year. Starting to grow. If you do it for another 10 years of investing the $100 a month, now you will have invested $36,000, which has grown in value to $163,000, and now you are making a little bit over $12,000 a year in passive dividend income. Remember, this is based off of $100 a month. Every year that you let your money compound and grow, it starts to grow and work for you a little bit more. If you want to see even bigger numbers, you want to turn this to $120,000 a year, well, you just got to invest more dollars, or it can be more aggressive here. More aggressive stocks, more aggressive funds, more aggressive dividends, but you can start to see the power of compounding. It's not linear, it compounds, meaning the amount of money that you can generate grows faster each and every year. And finally, step number 7 is don't blow your money on shiny objects, but think big. It's very easy as you start to grow, as you start to look for ways to grow your money, that you get caught up into these ideas that, oh, you just put your money into this thing and you'll be able to 5 or 10x it in 6 months by sitting on the beach, by following this simple process. And I want you to put it to the test. If it was so simple, wouldn't more people be doing that thing? I want you to think about that, because it's very easy with these very nice sales messages, very powerful things that say just invest $1,000 here, invest $5,000 into this program, and you're going to be able to 5x, 10x, 20x your money with almost no effort. Well, if there was no effort involved, everybody would be rich doing nothing. But I want you to think big. And I'm not going to say anything that I say to brag, but I say this to make a point. When I was first getting started on my own journey, entrepreneurial, financial education, call it whatever you want, I remember thinking, man, if I could make $100,000 in a year, I am set. Like, that's so much money, 6 figures. Like, I'll be able to ball out and do whatever I want, because that was the big goal for me back then. And then I remember my first time seeing the $100,000 in a year, realizing, wow, that was possible. I didn't think that was possible. That was like the big goal for me. And then I was like, well, what's next? Well, then I said, well, why don't we see if I can make it from $100,000 a year to $500,000 a year? Because that would be an insane goal. I mean, we're talking about almost $50,000 a month. That's a lot of money. And then not that long later, I was able to do that. And I started to meet people that are talking about $1 million a year. And I was like, are you crazy? $1 million a year? That's 7 figures. Do people actually do that? And then I was able to see that in my own life, growing from the $100,000 a year to now $100,000 a month. Then you start to realize, $1 million a year is great, but there's a lot of people doing $1 million a month. And now it starts to change the way that you think. It starts to change the way that you operate. And it is 100% possible. But you have to be willing to think a little bit different and then do things to actually get to that goal. Start with the end in mind. What is it that you want? You want to build wealth. Well, what does that wealth look like for you? Is it $3,000 a month in passive income, cash flow from your investments? Is it $30,000 a month? Is it having an investment portfolio worth $5 million, $2 million, $1 million, $50 million? What is it? Once you can start to define what that is, now you work backwards. Let's think big. I want $30,000 a month of cash flow. Okay, let's do some math. You want $30,000 a month of cash flow coming in from your investments, because this is gonna be able to fund your vacations, fund your life, fund a lot of fun, and now you have the money to buy a lot of nice things as well. Okay, let's go with that example. $30,000 a month is $360,000 a year. If you wanna make $360,000 a year from investments, how much money do you need? If you can get a 10% return on your money, a 10% cash flow, 10% dividend, which is possible as you start to invest, as you start to find more opportunities, well, maybe that means now you need, let's call it $3.6 million invested, which is giving you this $360,000 a year or this $30,000 a month. If you can get a 5% return on your money, well, that means that you need $7.2 million invested to be able to make you $360,000 a year or $30,000 a month. Now the game is, how do you get this money? How do you put this much money aside? If it's through your salary, well, can your salary be able to afford this? What percentage of your salary do you have to invest every single year to be able to get to this within your lifetime or as soon as possible? If you want to do it in the next 10 years, if you want to do it in the next 20 years, 30 years, you figure out whatever the time is. If it's not possible, well, you're going to have to find a way to make some more money. Maybe you have to find a way to start a business, start a side hustle, find a way to get some more money, learn how to do this, because this is what you need to be able to get to this. It's basic math. Once you know what you want, you can start working backwards, and then you can start making the sacrifices to actually make that happen. And that sacrifice might be spending less money, or the sacrifice might be working your butt off to figure out how you can make some more money, that way you can get that freedom, that we can actually have the wealth that you want. But it starts by knowing what your goal is, having a system for your money, having the mindset to become wealthy, earning more money strategically, not just so you can drive a faster car, but so you can invest your money better, and then sticking with it, letting the money compound and grow, going through the ups and downs and not getting caught up in the shiny object syndrome, because it's very easy to get caught up in the very exciting stuff of these get-rich-quick schemes. But those get-rich-quick schemes are only making one person rich, and that person is not you. If you have $100 in your bank account and you want to turn this $100 into $200 or $1,000 or even $10,000, you have to know how to take this $100 and put it to work. This is the art of investing money. And unfortunately, if you were not born with rich parents, chances are nobody taught you how to invest your money. But that changes today.